Morning, everyone. It's Friday morning, end of the week, a few minutes before 9 o'clock. And we had some important numbers this morning, and they were basically retail sales. And they were also a major disappointment. Everybody's trying to put a little bit of lipstick on this pig, but the fact of the matter is retail sales were expected at up 2.3%, which is still nothing overwhelming, and they came in at half that, up 1.2%. Ex-autos, they were expected 1.2, and that actually did a little better at 1.9. Productivity came in at 7.3% versus 4.4% expected. What you have to remember is productivity is directly related to layoffs and cost cutting. And unit labor costs, which were expected to come in at about 6.4, 6.6, depending upon who you listen to, came in at up 12.2. So you have import costs higher, you have retail sales lower, and you have productivity, which is a dirty word, at 7.3 versus 4.4. The proof of how it actually looks is what the market was doing, the futures. The Dow was down about 70. It rallied to down 38 and is currently down 100. NASDAQ was up about 40 after the numbers was up about 30, and right now is up about 16. And the S&P, which was up a little, moved to unchanged, is now down 3. So I'm assuming that we're going to have a soft opening. The COVID issue, the jackasses in Congress and the Senate leave for the better part of a month without doing a damn thing. Which also brings us into what retail sales are going to look like going forward if we don't get any kind of COVID relief until after Labor Day. That's another month. Okay, and in the news, we have Tesla still running on the fact that it's being split, and the stock is up another 50 at about 1671. We have Dillard's Department Stores, DDS, which closed yesterday at 2706, reported poor numbers, gave some moderately good guidance, and the stock this morning traded as high as 32.92. The last is 31.82, and that's up 478 or 16% on really, at best, crappy numbers. Baidu reported last night, and we also had a disappointment there. They gave disappointing guidance on future ad revenues, and the stock is trading 118 down 657 or 5.27%. Also yesterday, and I forgot to mention this last night, we had FAT Brands, FAT, which was literally, a $2 and $3 stock, who did an acquisition of a mall-based food deal with 700 stores, Johnny Rockets, which I've actually been to and in fact make a great malted. and the stock traded as high as 12. I warned people about this yesterday morning, how absurd it was that a mall-based business of any kind would rally like that, or the acquisition of a mall-based business would cause a rally like that. And when the stock actually opened, it had a high of 10 and a quarter, and it closed at 701, which was up 348 or 98%, which was a nice move, unless you happen to be one of the people buying it at 10 or 11, pre-market, and seeing it close basically pennies from the low for the day. This morning we have a company called Taiwan Liposome, which is, it was a $2.48 stock in March of this year, hit $12.65 in July, closed yesterday at $5.11, and this morning traded as high as $13.08 on the news that they have filed a liposome-based version, which would be implantable, of hydroxychloroquine for COVID. The stock is trading at 1140, up 659, so over 100% up on a drug that most people have already said has some major problems related to heart issues, and would really dramatically reduce its value with COVID. Okay, back to the futures side. We have the dollar on the screen here, as I've mentioned the last couple of days. Looks like it's going to bounce. The 5-day is ever so slightly rolling over again, with yesterday's decline to test, which I thought looked pretty good because we closed at the high. And this actually really surprises me because bond yields have moved substantially higher. The 10-year has gone from 51 basis points to trade as high as 72 basis points, which is a huge move in a week. And I'm surprised that the dollar is not a little stronger. I still think unless we break these closing lows, this is the low close in this consolidation at 92.76. We're trading 93.13, so that's kind of a distance away. If we don't break that, I still think we're going to 95.96. Other of the commodities that we've been watching, the gold actually acts really well. It's down 13 this morning, but yesterday or the night before yesterday, trading down at 1874 and popping all the way back up above 1950. Yesterday's high of 1974, and today we have a short range day, even though it's down 13. 13 is not, it's less than 1%, and frankly, I think that we're going to base here, maybe even test this 1915 or so area, and head higher. And the trade that we put on yesterday, which was the coffee, the ETF, coffee has rallied. It's pulled back a little bit. Same kind of chart as the gold. Rallied hard, came back, tested the breakout, started higher. It's towards the low of the day right now, but it is still up 80 cents. Which is 3/4 or 2/3% higher. And we'll have to see how this shakes out. But the fact is, we paid 70 to 73 cents for the calls. They closed 85, and JO, the ETN that we have the calls against, is actually up about 60 cents. So looks pretty decent. Again, don't forget to subscribe, and I'll be back later if there's a reason. If not, have a great weekend.